What's good, YouTube? 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 And what's good, YouTube? Okay, what's good, YouTube? What's going on? How is everybody doing? I guess you guys are all had a wonderful trading week. And I guess and I pray that you guys did all that you were supposed to do just to stay out the lane. This is your boy Harlem, and we back with another video. Today's video gonna be a trade breakdown on how I took 2 trades on gold. 1 win, 1 loss. Okay, 1 loss, 1 win, because it started by taking an L before we took a win, right? So this week was, I wouldn't say it was bad compared to any other Q1, but this week was mainly based on, are you willing to execute a setup or a trade that is 100% confirmed, or that aligns with your trading style, your trading system, or your trading edge, or your strategy, or your skill, you name it, right? So whether you took L's or you took losses, what's important is that you had to manage your risk, trade your plans, remain disciplined, remain patient, remain stoic, and far most importantly, remain profitable, right? Because if the mindset is profitable, the trader is profitable. Fuck what y'all think. So before we get any further with the video, make sure that you smash the like button, you subscribe to the channel, you share the video, you comment on the video, you click the links in my description to sign up with the brokers that I use. You will choose which one you prefer, but I mainly trade with Quick Trade and Xauusd, right? So you're gonna choose which one you want to work with, but I prefer both, right? Because I have my money in both brokers. And if you want to check out the day in a live vlogs that I recently dropped, you can still do that, right? So when we hit the charts, guys, you can clearly see that obviously gold was kind of bearish. Now we're looking bullish. Like, that's why I say this week it wasn't bad compared to any other week, but it was mainly based on you having to trade your system, your plans, your discipline, your rules, your skill, your strategy, your urge, you name it, right? So when we hit the charts and when I want to break down everything to you guys, right? So when you start off on Monday, yeah, I think it was on Monday when I took this L. So obviously on Monday, based on Friday, we did have our confluence, we did have our anticipations from Sunday, right? Going into the week on Monday with the same anticipations and the same plans, right? So obviously, but this was from the 4-hour, guys, but obviously I remember the zones very well. So we had price creating this intraday lows, right? So obviously, okay, let me use this. So from price printing out this intraday lows, right, you can clearly see that, okay, price created or printed out this intraday lows, right, from this first reaction and the second reaction. Obviously coming back for the third, we anticipated what a stronger reaction or a stronger move that could have led price moving to the upside. But obviously when you look at this carefully, you can clearly see that obviously on Monday, right, price on our London open, price was bullish, right, when we opened on Monday. But unfortunately price reversed and closed bearish. So obviously from this candlestick closing bearish, I told myself that obviously let me wait for the other coming candlestick to confirm to me what is gonna happen. Are we gonna react on our intraday zone, or are we gonna violate that intraday zone, right? So Monday I had 2 anticipations. Obviously price has created an intraday zone and price is still trading above that intraday zone, but our London session or our London market open is looking kind of bearish, right? So when our London open or our London session looked kind of bearish, and when price is still above this very same zone, this intraday zone, I obviously told myself that if it happens that we violate the zone, then I'm simply going to continue moving to the downside. But if price fails to break below this zone, then obviously I need to anticipate what that possible intraday reversal and look for price trading to the upside. So obviously we did have what price trading or violating price closing bearish or price closing below that very same intraday zone. So obviously from price closing bearish below that intraday zone, I took this trade based on what? Price having a rejection candlestick, a bear open, a bullish open, and a bear close on our London open, and a bear candle close below our intraday zone, with the candle after our London open indicated that we are bearish, and the coming candle after our London open closed bearish below that zone. So once price closed bearish below this zone, I anticipated that we might continue moving to the downside, but only if price does what? Price violates this candlestick. Only if price violates this current market price candlestick and trades below of it, then we can anticipate what? A move to the downside. But unfortunately, price spiked up. Price had to spike us out. Well, I don't want to say price spiked me out or price spiked us out, but I simply want to say price spiked to the upside, and we took an L before price moved in our initial anticipated direction, right? So this very first trade, I wanted to share this because my confluences and my anticipations and my reasons were pure like cocaine in the 80s. Everything was checked, everything was correct, everything aligned, but unfortunately price didn't favor what we anticipated, so we took an L. Price took me out, but I don't want to say price took me out. It's simply price hitting a stop loss and just doing what it wants to do. So many traders will fold and think that, man, price took me out, the markets are against me, the banks are after my stops. How can they be fucking after your stops with a 001 stop loss or a 001 trade when there's motherfuckers out there who are having a 900 lot size in a trade, right? Think of it like that. So we took an L on Monday. Confluences were correct, anticipation was correct, but price didn't favor what we anticipated. Do you guys get that? So we move. So coming yesterday, so yesterday's trade was kind of easy, I would say, if you understand how to trade. So yesterday's trade, one, we're having price trading above our what? Above our major zone, right? And then two, you can clearly see that price is in that what? Intraday range or sideways movement or a correction, right? Obviously, what you guys know it, that obviously once price has a push and a correction, there's a high possibility that price will do it, break below and continue moving to the downside. But price is holding a zone, and price did what? Had a push and now is correcting above the very same zone. Long as price falls breaking above, long as price falls breaking below this very same zone, we need to wait for what? For price to break above this intraday highs and anticipate what? A move to the upside. Do you guys get it? So when I woke up yesterday, I saw that okay, price is still holding this highs, price is still respecting this highs, right? You can clearly mark it out the way you want to mark it out. Prices created this high, price reacted on this high, and price came back again on this very same high. So when I woke up on Monday, on Thursday, yesterday, I saw that okay, price is still in that range, and price is still holding above that very same zone, and price is still looking to give me two signs. Are we gonna break below or break above, right? So when I woke up, I saw that okay, price had a what? A breakout candlestick after our London open. You guys already know how I trade, right? Candlestick after our London open, price had a what? A close above our very same zone. So once price closed above this very same zone, I told myself that obviously if we're closing above this zone, I'm looking to take trades once price trades above the candlestick that broke above the very same zone, and I would look forward for that move to the upside, because obviously price had a drop to the downside and price had a sideways movement above our major zone, and price had a break above our intraday highs, indicating to us that from the sideways movement and from price respecting the very major zone and price breaking above the very same intraday zone, we are safe to say that price might still look to continue moving to the upside. but it's only based on how you trade. Many traders could have used the hourly, many traders could have used the 5-minute, some 30 minutes, some the 15 minutes, some 2 hours, some the 4 hour, but I mainly chose the hourly because it's an intraday time frame, right? Anything that happens within the hour, it's easy to spot out what might happen next on the hourly time frame, right? Based on how I trade. I don't know about you guys. So this is how I took this trade, right? Price had a move to the downside, and price fell breaking below our major zone, and price started having a sideways movement above our major zone, and price broke above our intraday highs, right? Those current market price highs or those intraday highs, whatever that you say it is. Once price broke above and closed above, we simply anticipated that possible move to the upside, and that's how price hit our TP. So this trade, the first trade on Monday, price the market took our 5 pip, right? Coming back yesterday, the market gave us 10 pips. So I lost 5 and I gained 10, meaning I'm still up for the week. Do you guys get that? So I want to learn a few things before I end this video. You guys need to understand that in Forex, it happens that you can have all your confluences right, you can have a good trading strategy, a good trading skill, a good mentor, a fearless mindset, a optimistic mindset, and everything like that, but you are still going to lose trades because losing is inevitable. There's nothing that you can run away from. You have to face taking L's, because if you take L's, it's easy to learn, but if you keep on taking wins, it tends to get hard for you to learn, because there's nothing that came out of that. Okay, well, you gained profits, right? But there's nothing that makes you want to learn how you made those profits compared to you having to take an L because you want to understand why you took that L. I journal both losses and profits, and I pray that you guys also do, right? So understand that in trading, it's inevitable that you're going to win 100%. And the other thing, you guys need to focus on your skill, your setups, your discipline, your patience, your commitment, your positivity, your optimism, your growth as a trader, because at the end of the day, it's not about you having to have 100% trading skill, but it's about you having to have the right mindset, growth, consistency, patience, discipline, positivity, and everything like that, so you can grow as the market changes, because the market's forever adopt new things to learn. So if you are fixing your mindset and you keep on growing, then it will be much easier for you to understand that, you know what, as the markets evolve, I'm also evolving psychologically, physically, emotionally, mentally. Do you guys understand that? So you need to understand that at the end of the day, it's not about having 100% trading skill, but it's about having a fearless mindset and an optimistic mindset, and being a fearless and disciplined Forex trader, because at the end of the day, Forex is very hard, and Forex can be stressful and overwhelming. So you need growth, you need growth, you need growth, and you need to better yourself all the time. Without further ado, this is your boy Harlan. That's all I got in this video.